So here's 5 questions you must ask before you get a fix and flip loan. Hey everyone, it's Mike Bonn with Cash Flow Company. I want to make sure you protect your profits, get in the right funding, and start making money. So let's get into it. Question number 1 makes sense. What are your total costs? Not just your interest rate, but what are all your fees? And those fees are from start to finish. So what are your origination costs? What are your processing, underwriting, appraisal fees? Do you charge for credit? Do you charge for background checks and draws? All of these fees add up. You want to make sure when they put that money aside, you know exactly how much it's going to cost you to get it back out. A lot of lenders love to keep their rates a little bit lower, but then jack up their fees. So make sure you understand all the costs associated with doing a loan with them, because you want to know what it's going to cost you for a loan from start to finish. That means interest rates, costs, all those. So let's put this in real numbers. Say you have a $200,000 loan. They charge you 2 points. That's $4,000 just in origination cost. You add on a bunch of fees, and that could be somewhere, between $6 and $8 grand, even before you swing a hammer. So I always ask, I always get in writing what it's going to cost you. And just remember, every lender may charge you a little bit different rates and fees based on your qualifications and your LTV. Question number 2, how do they value the property? Are they using an appraisal, or are they doing an internal AI kind of generated valuation? Can you submit your own comps? Can you show them what you're looking at? Will they use your scope of work to figure out or calculate the value? And can you change anything in your scope of work to influence the valuation? Remember, value and how they value the property really matters. You could see $300,000 in a property. They come back and say, we only see $260,000. That's going to impact how much money they're going to lend you. And if they lend you less, that just means you're going to have to come out of your pocket more, or you're going to have to go on to a different deal. Talking about appraisals, question number 3, what is their loan to cost and their loan to ARV? Most lenders are going to lend you a set amount of loan to cost, either 85 to 90% of the purchase price and up to 100% of the rehab. But they're also limited to a max loan of 70 to 75% of the after repair value. In other words, if your purchase and your rehab is above their ARV limit, they're going to require you to bring in more money. Here's an example. Let's say you buy a property for $150,000. Your rehab budget's $50,000, so that's a total of $200,000. The ARV they come up with is $250,000, and they are a ARV lender, and their max is 70%. That means you're going to have to bring into closing $25,000, because their maximum loan is going to be $175,000. The $250 times 70% is their maximum loan, or ARV. So you need to know what their max ARV lending requirements are. Is it 70? Is it 75? Will they lend 90%, or even some lenders 100% of the purchase price? You need to know your numbers before you get a property under contract. And just remember, it's not only the down payment, you're also going to have to bring in closing costs that we talked about. So these are all the numbers that you need to understand before you put that property under contract. Question number 4, what are your credit requirements? What is your experience requirements? And what are my reserve requirements? Most lenders, especially in the fix and flip world right now, we call them Wall Street lenders because they're based on Wall Street money. So they have a box that they put everyone in, and it's based on what is my credit score. Some of them go down to, mid 600s, but most of them want credit scores in the 700s. And the higher your credit score, the more they'll lend you and the better the terms you'll get. Second on the requirements is, how much experience do I need? 1 deal completed? Is it 3 deals completed? Is that completed over 2 years? Is it completed, over the last 5 years? Or is there a way, if I'm just starting out, to get a loan without the experience? These are the questions you need to ask. Last on the requirements, how about reserves? They want to know you have some money set aside for those interest payments, utilities, everything that pops up, or even surprises. So are they requiring 3 months of reserves, 6 months of reserves? What are their reserve requirements? So just understand, if you don't meet the requirements, they may deny the loan, or at least cut the loan to ARV that they'll lend you. Think 65% instead of 75%. So make sure you understand what they require from you, want from you, just not the deal alone. Number 5, very critical, how does the draw process work? Remember, they're going to escrow the money that they fund. That means they're going to take the money for the rehab, keep it in an account, and as work is completed, they're going to give you the money. You want to know exactly how their draw process works, how it's scheduled, and what you need to provide to them to get the money out. So first ask them, do I get any money when I close? At funding, when we purchase a property, are you going to release part of the escrow at that time so I can get the project moving? Second, are draws based on inspections, receipts, both, permits? What do I need to provide to you to start the draw process? Next, how long does this take? How long is it? 3 days? Is it 5 days to get the money so I can keep the project going? And then also, are there a limit on the number of draws that I can take out? Is it limited by 1 a week? Is it limited by the numbers I could take out? What are the limits on your draws, and how do I always access these funds? And this goes back to the charges, do you charge every time I do a draw or do an inspection? What are those fees so I understand before I get into this deal? So here's an example. Your contractor gets in, does the demo, is ready for the next step, but you're waiting on draws. And you find out it's going to take 10 plus days to get the funds. So that's wasted time, wasted money, and your project slows down. We all understand the faster you pay your contractors, the faster you get the materials, the quicker this deal is going to be done. The faster it's done, the more money you're going to make. Get it on the market, get it done. Fast draws equals fast flip. So let's recap the 5 things you need to know before you sign and get a fix and flip loan. What are the total costs? How is the property valued? What is your maximum LTC, loan to cost, or ARV based on my requirements? And then talking about requirements, what is your minimum credit score? What kind of reserves do I need? And then what kind of experience? All of those things matter. And then most important, or at least as important, is how does your draw process work? Because you need the money to fuel the project to get it done on time. These questions are here to help you compare lenders, avoid surprises, get your properties funded correctly, and start making some money in this game. So get money ready. Start preparing yourself. Join one of our funding-based classes. Learn how to fund your projects correctly. We're here to help you flip smarter, fund faster, and enjoy investing just a little bit more.